Thanks for listening to this video. The question is equity sharing. How does it work? Now, if you're a landlord, please pay attention. And you may want to show this to your CPA because it's based on the tax code. So, more than 40 years, equity sharing has been a great solution for buyers and sellers and investors. So, how does it work? So, for the home buyer, if you're a tenant and home ownership is a big deal, but that dream seems to have less and less chance in the last days. But you don't have to wait for your dream. If you've got reasonably good credit and sufficient income to support normal costs of home ownership, the equity share plan from the IRS will help you with the down payment so that you can realize your dream now. Now, in many cases, because of the tremendous tax benefits and good financing programs that will be available to you, your monthly mortgage payment can be a little bit more than what you're paying now in your rental. Now, plus, you will start to create thousands of dollars per year of equity buildup in your own home with the equity sharing program so that you can build your own financial future instead of your landlord's financial future. So here are the benefits of the equity share program. You avoid the high cost of 100% financing. You have the tax benefits of home ownership. You build a financial future for you and your family. You increase your home purchasing power. You qualify for a better home loan. You lower your monthly payments and you buy a home now instead of waiting to save up and get your credit and your debt squared away. So what's in it for the real estate investor or the real estate landlord? So first-time buyers, divorce buyers, relocating buyers, and credit-challenged buyers, 100% financing is available, but it often makes mortgage payments way too high to be affordable. Equity share program provides a down payment. The buyer qualifies for the loan, easier qualifying with the cash down payment, compensates for credit issues and income shortfall. Now, the buyer's agent helps the buyer find the home. So if you're an agent out there and you're a buyer's agent, you're going to help the buyer find the home, represents the buyer as a real estate agent. The equity share plan can increase purchasing power by $50,000 to $100,000, or it can lower the monthly payment by $500 to $1,000. There's no additional cost to the buyer. There's no additional time required to qualify or complete a home purchase. Let's talk about it from the landlord or investor's perspective. The equity share plan is an opportunity for an investor to make a good return on a safe and hassle-free investment. Now, this is different than buy and hold traditional, put 20% down and rent it out and get a property manager. Equity share plan is a little bit different. It can be a vehicle for the novice investor to comfortably get started in real estate investment, as well as the experienced investor to diversify their investments and eliminate property management headaches. Now, that's the biggest headache, is dealing with tenants and toilets in the morning, because your tenant in an equity share program is quite different than a regular tenant. So through equity sharing, parents can help their children, business owners can help their employees, and they can build their own retirement funds at the same time. Truly a win-win proposition. So you use the tax code. Benefits of an equity share investment are the following. There's no loans in the investor's name. There's a smaller financial commitment. There's no negative cash flow. The buyer has all normal rights, responsibilities, and tax benefits of home ownership. There's no monthly payments required on the down payment assistance. The investor is not a landlord. It's kind of like a landlord. It's more of a joint venture partner with the tenant that's in there because the tenant doesn't abide by the landlord-tenant laws. The homeowner buys out the investor after 3 to 5 years. We prefer a 60-month contract. The investor is repaid the money invested plus the share of the property appreciation. See, that's kind of like that joint venture I was talking about. The investor's financial interest in the property is terminated. The built-in buyer for the property, there's no property management fee of 10% of collected rent. There's no vacancies and cleanup. And, most people factor in 10, 12% for vacancy rate. It's an excellent return on investment. It's a suitable target for 1031 exchanges. So you could do 10 of these a year, and then when they all sell in 5 years, you just go do another 10. It's an allowable investment for IRA funds. Now think about it. If you had properties that were tax deferred in an IRA, and the IRA acted like a corporation and bought it in behalf of you, the investor, so all the profits would be tax deferred. And it's a great way to use your IRA fund. It enables the investor to spread out risk. Now, all equity share investments are secured by equity share solutions documentation. So I hope this has helped you a little bit. There's going to be another video about the taxation of equity sharing. I want to thank you so much for listening to this first introductory equity sharing. How does it work? Thanks a lot.